You know, the financial market, it can feel like this massive, unsolvable puzzle, right? But what if we started treating it like a crime scene? What if we became the detectives? Well, in this explainer, we're going to do exactly that. We're going to crack the code by learning to read the market's clues. So here's the big question. How do you actually solve the market's biggest mystery? Look, it's not about some magic formula or a crystal ball. It's all about knowing what evidence to look for, how to interpret it, and then how to piece it all together. Well, like any good detective story, it all starts with the clues. Every single piece of data, whether it's a tiny price tick or a huge central bank report, it's a piece of evidence. And our job as the market detectives is to gather all these clues and figure out what story they're trying to tell us. So let's start with the basics, shall we?
All right, every detective worth their salt starts right at the scene of the crime. And for us, that's price and volume. This is where all the action happens, and it's exactly where our investigation has to begin.
First up, you've got your price data. Think of this as the footprints left at the scene. It's the raw, unfiltered record of an asset's value, and it answers that first, crucial question for any investigator. Okay, what happened here?
This data, it's basically our detective's logbook. It's what helps us identify trends, spot recurring patterns, and even pinpoint potential entry and exit points. The tools you see here, like moving averages and candlestick patterns, they're like our magnifying glasses. Moving averages kind of smooth everything out so you can see the real underlying trend, while candlestick patterns show you the tug of war between buyers and sellers in real time.
But, just knowing what happened, that's only half the story. We absolutely need to know how much it mattered. And that's where volume data comes in. It's the clue that tells us about the conviction, the force behind a move. It answers the question, yeah, but how significant was it?
Here's the thing you absolutely have to remember. Volume validates price. A big price breakout happening on huge volume, that is a very strong signal. But a new high on really weak, pathetic volume? Now that's suspicious. That tells you the move might not have any real momentum behind it. It's a key clue for gauging the crowd's conviction.
Okay, so we've dusted for prints at the crime scene. Now, any good detective knows you have to widen the investigation to understand the context. We need to start looking for the motive and for the overall mood of the crowd. And that means zooming out to the bigger picture, the economy and market sentiment.
And this slide just lays it out perfectly, doesn't it? On one side, you've got the facts. Those are the economic indicators that give us the underlying motive for why the market is moving. And on the other side, you've got the feelings. That's market sentiment, which tells us all about the mood of the crowd. You really need to understand both to solve the case.
So let's start with the hard facts. We're talking about economic indicators, the official stats like GDP growths, inflation rates, and employment numbers. They give us a cold, hard, data-driven assessment of the economic world our market is living in. Now here's a really crucial piece of detective work. The market is almost always trying to guess what's coming next. It prices in expectations. So it's often not the data itself that causes a big move. It's the surprise. When the actual number comes out and it's way different from what everyone predicted, that's when you see things really get volatile. So you always have to compare the actual report to what the consensus forecast was. Okay, now for the feelings. Market sentiment. It's all about crowd psychology. Are people feeling fearful? Are they feeling greedy? Tapping into this collective mood can give us some incredibly powerful clues, especially when things get to an extreme.
And this is where, being a bit of a contrarian detective can really pay off. When investor surveys are showing extreme, off-the-charts optimism, it's often a screaming signal that a market top is getting close. And on the flip side, when the VIX, often called the fear gauge, is spiking, it can be a sign of a market bottom. Just remember, always confirm these clues with what the price is actually doing on the chart.
All right, we've covered the basics, the crime scene, the context, but the best detectives, they don't just stop there. Nope, they call in the forensics team for a much deeper look. So let's dig into the world of advanced data analysis.
One of the most powerful forensic techniques is what's called intermarket analysis. The idea is simple. No market is an island. Everything is connected. As you can see here, when oil prices rise, it tends to strengthen the Canadian dollar. A detective who connects those dots can start to anticipate moves in all sorts of related assets.
So our advanced toolkit has three main parts. First, you've got fundamental data. Think of this like doing a deep background check on a company. Then there's derivatives data, which is kind of like listening in on the professionals to see where the big money is placing its bets. And then there's alternative data.
This is the cutting-edge stuff and often the most revealing set of clues.
Okay, now this is where things get really interesting, because the newest clues, they're being found in the most unexpected places. And it's so important to understand this stuff because it's what the biggest players in the game are using to get an edge.
For example, satellite imagery. I mean, forget waiting for quarterly earnings reports. We're talking about hedge funds using satellites to literally count the cars in a retailer's parking lots. Why? To estimate sales before the company even announces them. It's basically forensic accounting from space.
Or how about this one? Anonymous credit card data. By analyzing millions and millions of spending patterns in real time, analysts can spot new consumer trends weeks or even months before the official economic reports come out. It's an unbelievably powerful early warning system.
And of course, there's social media scraping. We're talking about algorithms that scan millions of tweets, posts, and comments every single day to gauge the public's mood towards a brand, a product, or even the entire market. It gives you a real-time pulse of the crowd that's way faster than any traditional survey.
So, we've gathered all this evidence. We've got clues from the crime scene, we've done the background checks, we've even brought in the forensics team. Now comes the most important part of any investigation, putting it all together to crack the case. It's time for the big reveal.
And honestly, this quote right here says it all. The absolute key is synthesis. Any single clue can be misleading. I mean, a footprint at the scene could be anyone's, right? But when you have a footprint and a motive and forensic evidence all pointing to the exact same conclusion, well, now you've got a strong case.
Okay, so let's walk through it. How do you build a high-conviction case? Step 1. You get the signal. Let's say a strong price breakout. But is it legit? Step 2, you look for the confirmation. And boom, high volume confirms the move's strength. Okay, it's strong, but why is it happening? Step 3, check the context. Positive economic news just came out that supports the trend. And finally, the validation. Is the crowd on board? Yes, improving market sentiment validates the signal. You see, when all 4 of these clues line up, you've gone from a simple hunch to a really well-supported theory.
So there you have it. We've laid out the entire detective process, from finding those first clues all the way to building a rock-solid case. The toolkit, all these different ways of looking for clues, it's all yours now. So, for your next market investigation, which clue will you investigate first?